Now, global stock markets have rallied to their highest in 2 years. Is there still time to get in there? To help us answer this question, I'm joined now by Yogi Dewan. He is CEO and founding partner of Hassium Asset Management. So he's got 13 years of professional investment experience. So you're definitely the right person to be talking to, Yogi. Are equities the place to be right now?
I think this is still a time to be cautious. Valuation does look attractive. Interest rates are low, but there are things still to be concerned about, despite the positive earnings seasons that we've seen. You go into the US, we're still worried about the housing market. There's still concerns, big way in terms of what's going on there. If you go into Europe, we've got sovereign debt issue. Austerity risk measures still out there. You go into China, we've got asset bubbles in terms of the equity markets, the bond markets, the commodities markets. And in the financial sector, there's still some concerns about rollover requirements going forward too. So be cautious, but valuations look attractive.
You've mentioned a number of pretty big issues there that will no doubt be on the agenda of the G20 summit. Are you expecting any major developments to emerge from that?
It's hard to see. There's some big issues being raised at G20. Obviously, we have the whole thing around QE2 and its implications. Remember, with QE1, we had 1.7 trillion. We didn't see any impacts on growth. We didn't really see any impacts on inflation, and the dollar actually strengthened, didn't weaken. So it's hard to see whether 600 billion is really going to have the desired effect on unemployment and the housing market in the US. But the big issues for G20 relate to, obviously, the undervaluation of the renminbi or the yuan and what's going to happen post-QE. You've had massive emerging market inflows, and I think that will be discussed. You've had quite a lot of, call it currency wars, going on at the moment, with Brazil increasing its tax to stop inflows.
How does that impact on your thinking as an investor in terms of where to put your money?
It has a huge impact. We focus on three big decisions for the families we look after. We look at equities exposure relative to cash and bonds, we look at US dollar exposure relative to base currency, and we look at emerging market and commodities exposure relative to everything else the families do. Those three big decisions account for about 80 to 90% of your performance. The big thing that's going to happen around G20 and also QE2 is what happens to the dollar. Our view is that you've seen the dollar weakness that everybody's been concerned about, or the euro strength.
Is that ebbing away?
It will ebb away. You should see the dollar strengthen back towards a pricing parity level of a 125. So we're expecting a big change now that QE2 is priced in.
So you're not concerned about the implications of QE2 on the dollar as a reserve, on the position of the dollar as a reserve currency?
No, not really. I mean, this will be discussed at the G20, and they're talking about a new basket that includes the dollar, the yuan, the Brazilian real, sterling, and the yen. The reality is this gets talked about all the time. I think the dollar's here to stay as a reserve currency. Don't expect major changes there, but we do expect to see some dollar strength over the longer term. Remember where pricing parity is, around 125. That's fair market value. The euro's about 10 to 12% overvalued at the moment.
And we've seen a sharp widening of bond spreads in the Eurozone. Irish government bond yields soaring to a new record of 15-year high. I think investors are refocusing on sovereign debt risk in this region.
Completely.
Off the back of QE2 in the US.
Well, it's not just QE2. It was Sarkozy's comments and Merkel's comments following on from what's been going on in peripheral Europe. And they're now basically saying that the private sector should really take part in some of the pain.
How should that impact on strategy?
It will have an impact on the allocation that you make to bonds and at what stage you make it. We're staying very short-dated. We're quite concerned about European debt and all that's actually going on. Stay short-dated, don't take huge amounts of credit risk. Think of bonds as a carry versus cash.
Yogi Dewan, CEO and founding partner of Hassium Asset Management, thank you.